It's anyone's guess how things would move, and it's anyone's guess about crude prices would stabilize, because my view is very simple, that in the short term there would be a disruption, but the Arabs, the French, the US, everyone will come together and they will ensure that the deficit which has got created because of this problem will be curtailed. But Vandana Hari is there. Let's connect with Vandana. We're debating whether this will lead to a temporary or a permanent uptick in crude prices, because now that geopolitical risk will come back.
Good morning. And I was just listening to all the points that you were raising. This is clearly a multi-dimensional issue. We'll need to think about the immediate and short-term repercussions in terms of the global supply-demand balances. And then longer term, again, as some of the points that you raised, is what does this mean for the geopolitical tensions, which have already been high in the Middle East, and the geopolitical risk premium that may sustain in crude prices even after some of this shortfall has been offset. So in the short term, as we have seen this morning, prices have been quite volatile. They have spiked. I was watching the first few seconds after market open, and Brent at one stage climbed from $60 settle of Friday to as high as $71 and a few cents. So it was up 20% in the first few seconds. But as I see prices now, of course, they have calmed back quite a bit from the initial seconds and up about 10% now. Again, as you mentioned, the release of oil stocks, the strategic reserves in the OECD, a big chunk of it is in the US. That is going to be a major factor in determining the sentiment in the next few days. Of course, we're also waiting to hear from Saudi Arabia, their assessment of the damage to the facilities. These are huge facilities, 7 million barrels per day of oil and gas processing that happens at one of the damaged facilities. So how long they estimate it will take them to restore normal production, up to 5.7 million barrels per day. That's huge. That's nearly 6% of global supply that has been shut in.
But Vandana, what is the sense that you're getting? I mean, is this just a knee-jerk reaction, or would you say that the direction altogether has been changed for what looked like extremely benign prices when it came to crude?
It is definitely a knee-jerk reaction. You also need to bear in mind that the reaction this morning is based on limited information available, a lot of just people connecting the dots for themselves, because what we do know is, for the time being, as we speak, 58% of Saudi production is out of the market. We do know that and have assumed that the IEA as well as the US will work together to ensure that there isn't a supply shock in the market. What we don't know is that how long these inventory, or to what quantum of releases from the inventories will be needed to offset, because we don't know as of now how much of total cumulative Saudi production will be lost. I think that remains a major question mark for the market right now. So in terms of, are we going to see a secular upshift in oil prices? I would say probably not. But for the next, higher prices than what we've seen in the past few months, going into the next few months, that's definitely a possibility.
Peter, do you think this is a permanent reboot? Peter's not there. Okay. Vanda, closing comments from you. Let's throw in the demand angle here. We can talk about supply, and looks like the comments which have come from US President, or what Saudi Arabia is saying, that it looks to me at least that the supply would be restored by this week or maybe early next week. But on the demand front, there is a challenge. Electric cars are coming back. China, which was like an oil guzzler in the last decade, now the appetite for oil has come down. So some would argue that we may get a temporary uptick in oil, but ultimately it's also about demand. And on the demand front, the news for oil producers is not great.
On your point about the likely restoration of oil supply, I do think the market is taking those reports, which are unofficial, that supplies may be restarted today, partially, and in the next few days. I think the market is taking that with a grain of salt. The fires were huge. Usually, such facilities, they would have suffered major damage. It would take several weeks at least for repair and resumption of normal supply. As for your question regarding demand, absolutely valid point. For the past several months, the world has been far more worried about demand not failing to catch up with the rise in supply, especially from the non-OPEC countries. That big picture hasn't changed as of today. But the only thought that I would like to leave our viewers with is that let us not forget that China and the US are also starting to come back. Saw a major thaw in their tensions last week. We do believe that Trump will want to get things back on track as he looks at the presidential elections in the US next year. So I guess the question would be, what if the economic headwinds abate as a result of maybe perhaps an even interim deal between US and China, and demand growth picks up again? If in that scenario we still have a substantial part of the Saudi production out of the market, we could see prices sustaining higher for the next several months.
All right. Okay, Peter McGuire is also joining us. Peter, good morning. We're discussing, of course, the impact on oil prices given the attack. Talk to us about how you see prices shaping up after that knee-jerk reaction, given what we're anticipating in terms of supply being restored. Let's take a slightly longer-term view over the next few weeks, Peter. Do you see prices significantly higher, or do you see stability being restored with the US as well as Aramco, trying to restore supplies as fast as possible?
Well, first part, I think it's going to take a lot longer than 5 days to get everything back on track as far as the Saudi situation from the producing side. So there's the first part. Though, if they can do it in 5 days, then I think the world will be stunned. Many analysts are saying, it seems to be that's a very, very bullish statement. The second part of it is the fragility of the oil market, and that was demonstrated over the last matter of hours, the largest spike in history. If they're going to see continued attacks, and no one knows that's the future, and are we heading back to a sort of like a mid-80s standpoint? And then you've got the choke points across, what happens as far as Strait of Hormuz, locked and loaded from the rhetoric coming from President Trump, and the attitude as far as the US to go in with their ally being Saudi Arabia and try and maybe defend this. What happens as far as the Saudi Aramco IPO? There are so many economic factors that play into this whole fabric of an argument that, yes, you could certainly see prices spike considerably higher if you get continued strikes. So no one knows that, but I think that it's showing to the market the volatility of the market and naturally the sensitivity with it, with probably the most precious commodity after water that's traded in the world.
All right, Peter, appreciate your time. Thank you for joining us. Okay, now you went home on Friday with a different view because because what's happened in the crude market. I don't think you should change your view. Let me put it this way: this is not like a permanent reboot which is going to be having impact on Indian macros and crude prices. Look, what's happened is unfortunate. I don't think this is permanent. So any event, if it is not going to have permanent impact on the financial markets, I think it will lead to near-term adjustment. Surely today airline stocks, paint companies, oil marketing companies, they will react.